if you have to go beyond 900,000 crore of revenue, what, like, we'll have to do more job work? Will that be the major growth, major source of capacity enhancement, or we are very keen on looking at, buying an existing facility also?
See, the job work capacities are largely in similar products, not in some of the new products that we are looking at, which are not acid chloride. So whatever job work capacity is within the associate companies is also in acid chlorides. So naturally, when we are talking about products which are non-acid chlorides, we will have to look outside. There is no question on that. Now, looking outside, as I mentioned, would mean two things. One is that are we able to find a job worker outside with this kind of capabilities and this kind of permissions? That is one. And or alternatively, are we able to look at a small facility, existing facility, which we can take over? So all these considerations are being, all these are being considered, and as I mentioned, that based on how customers come up with their plan in terms of ramp up and all that, we will make decision, accordingly. For example, if customer says that, okay, 4 or 5 customers says that, look, our ramp up plan is going to be very, very slow, then we may not immediately invest into anything. We will just look for a job work facility, non-associate job work facility.
Okay.
And if customer says, no, my ramp up plan is quick, then naturally we will have to look for something where we are committed properly.
Okay. And then one last question on, products and the development. Apart from this new products that we are planning to launch, which we are expecting to scale up in second half of FY25 and, FY26, how many products are under development, and what are our plans of launching new products for, let's say, medium term over the next 2 to 3 years?
So product pipeline is quite big. Again, as I have explained in past, that we continue to look at new products, new opportunities in 2 ways. One is that we do our own market research, and based on that we look at potential products. And second, customers' interaction. So most of the times our customers are giving us multiple products that can you look at these products and can you tell us? So many a times we have to say no because they may not be within our strategic intent or within our capabilities. But pipeline is quite robust. The R&D team, the new business development team, new product development team is typically very, very busy. And basically that's not an issue. And some of the products that we are looking at can be also a very, very large volume potential. But right now, of course, it is more at understanding stage.
Okay. Thank you, Nishant.
Thank you.
And sir, one more request is for, the stock has been under this range for some time now, and given hopefully the business will bounce back over the next 1 to 2 years. One request was on buyback if it's possible. Given our very good balance sheet now.
Sure. Now see that this is a good point, and we will definitely put it to the board. But on one hand, you are asking me about when you are going to invest in new facilities, and on the other hand, you are telling me to do buyback. So we'll have to see what is right for business, right? So we'll take the decision accordingly.
So thank you, sir. Thank you, Nishant.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity.
Good evening.
I have a couple of questions. Good evening. So I have a couple of questions first with respect to volume degrowth in FY24. So you said our volume declined close to 25% in FY24. So would it be safe to assume that the overall demand fell by 25%, or we lost market share or wallet share with our customer?
No, see, there has been loss of market share, but it is to some extent, very small extent in domestic market. So far as, and as you know, our domestic market is quite small compared to export. Export market, there is no market share loss in that sense. Overall requirement from the customers reduced because of their end product demand being subdued, of course, on a temporary basis. As I mentioned, structure of the business has not changed. The customers are also expecting revival of their demand gradually as, either people learn to live with this uncertain situation, which, props up and gives surprises time and again, or some of these uncertainties go away. So they are very clear, the customers are very clear that demand will gradually go back to the original level. That is the easy part. The hard part is that they are not able to, or nobody is able to very confidently say how much time it will take. So there are discussions, there is indication that maybe in another 12 months' time, everything should reach to the earlier levels and all that. So based on that, whatever intention we are doing, that H2 and the next year, we'll see some gradual increase or gradual growth or reversal of degrowth that we have seen.
Yeah. And my second question is regarding our investment in Silox India Private Limited. So I just wanted to know what is the purpose of this investment, and are we looking to disinvest this investment, or is it something like useful to our business?
No, see, the point is that Transpek sold its sulfoxynation business way back in 2000 to an European group called Preon Group, and Silox is their organizational name. At that time, when we sold off that division, we maintained a small percentage of shareholding as part of the transfer agreement. So that shareholding has grown over so many years to a certain value. Now, when I say value, this is not market value because this is illiquid stock. This is not listed, and this is privately, in that sense, privately held company. So it is not easy to encash because even if we want to encash whatever value that we can fetch, the Silox or the company or the promoters of Silox or the board of Silox may not agree to part ways with such a large amount of cash. So this is kind of illiquid investment at this point in time. If you ask me, I would also like to encash this investment, but it's not that simple or it's not that easy. On the other hand, we generally get good dividends. Over so many years, we have been getting very, very good dividends coming out of this investment.
Yeah, that's good to hear. And my last question is regarding our, you said our high margin products are 36% of the total revenue, right?
Would be. Once we add some of these high value or high price and high margin products, once we start adding that is the target that we have. About 30-35% of the volume would be coming from those products.
Okay, so what is the current ratio of total revenue for these products?
Almost none, because these are all non-acid chloride products. So as I mentioned, they are under validation with customers.
And what is the margin profile of these products as compared to our current product?
This can be almost, you can say 15 to 20% higher than what we are earning today. In terms of the EBITDA margin, you can say. For this product, especially about whatever revenue that we talk about, 30%, 35% revenue that we may fetch, that would give much higher EBITDA than what we are. Our EBITDA, as you know, generally is between 16 to 20%. This time, I think it's about 17.8% for the entire the whole business. once we are able to commercialize these products, 30-35% of our volume should be probably EBITDA of 18 into 20, so about 22-23% EBITDA should be there from this product.
And my last question is regarding the die market. So can you give a comment on how the die market is performing? How is the customer engagement with die players?
Actually, we have very small exposure now in dyes and pigments market, because our main product that we used to sell was thionyl chloride, and now we are not selling it. We are consuming entire thionyl chloride production captively. But whatever my understanding is about dye market is that it's still not recovering. I mean, it's still in trouble.
Okay, fair enough. Thank you for answering all the questions. Thank you.
Thank you. The next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity, and thank you for organizing this call also. I just wanted to understand what is the capacity utilization for the current year, that is financial year 24, and what is the capacity utilization we are expecting for financial year 25?
68% has been 24, and about 78-79% we are expecting for 25.
Okay. And what is the peak revenue at current prices we can expect, and peak revenue at median prices?
Median prices are difficult to say, but if we are able to utilize everything well and at whatever is the normal price that we can fetch, we can reach around 920 crores.
With 78-79% utilization.
No. As I said, if we are able to utilize everything fully.
Okay, full utilization. Okay.
Yeah.
And do you see any revival in end user industries where our products are getting consumed?
Yeah. So see, there are three major segments that we need to look at when we talk about this. One is polymers, which is of course polymers are in two forms. One is in textile and clothing form, or second is in formed, so kind of molded form and all that. And third is of course thread and everything. But all these polymers, the supply that we do is going to very high-end polymers. They are called aramid fibers. And the market for that, or the demand for that, is right now a little bit subdued, but it is going to be consistently growing. For example, as we speak, some of the companies in Eastern market, Far East market, like Korea and Japan, they are expanding their capacity for aramid fibers. Some are in fact almost doubling their capacity.
Okay.
So aramid business is going to gradually consist, as we understand today. So far they have not been, nobody has been able to really find a significantly competitive material. And aramid business is also restricted within a few companies globally. When I say aramid, high-end aramid, there are also some low-end aramid products where some Chinese companies are active, but most of our products go into high-end market. So growth is there. Growth is not going to be kind of exponential or very fast, but potential is there. The growth is going to constantly happen.
Okay. And I see that our fixed assets increased by almost 25% in the last 2 years. So what is it for? Can you provide some details over there?
Yes. See, basically, one of the major thing that you are seeing in assets is right of use assets. So, because of the accounting requirements, in AS requirements, whatever assets that we have on lease also need to be put inside the gross block or whatever the asset block as right of use assets. So right of use assets, for example, has grown almost by how many crores? 70 crores, right? 70 crores. Now, when I say 70 crores, it is not actually the asset increase. It is purely the way accounting is done. So what they do is that they take 5 years of the leased assets. We have, as you might be knowing, we have many ISO tanks which are on lease. So that lease asset, they do the 5-year calculation of the lease rent, and then they do some calculation. Apply some formulas, and then they come to a number which is basically considered as value of the asset, and that is put in that. Secondly, there is also a small increase. There is also another increase in property, plant and equipment, which is about 32 crores, which is largely due to thionyl chloride. We had built one additional stream, then capacity modification, enhancement. There is good amount of expenditure on energy conservation. As I mentioned, we just replaced one plant, so some part of that is accounted in that. There has been some of the expenditure on new boiler, for example, like that.
I got it. My two more questions. So one is, you already answered that partially. We have investments of around 300 crores. I wanted to know about the buyback plan. So you mentioned something about that. I also wanted to know where this fund is currently parked, where it is invested. So if you can throw some light on that.
No, there is no parking of fund in that sense. See, when we invested, when I say invested, we just held some shares in that company, Silox, and the value of our face value of our investment is very, very small. It is just about 3 crore.
Mm-hmm.
Okay, and valuation as per the balance sheet of that company is 309 crores. Now, as I mentioned, that is just valuation. This is not money that we have invested. What we had invested was only 3 crores. And the valuation is done based on Ind AS requirement. So it's kind of notional value.
Mm-hmm.
As I mentioned earlier, also I would love if I am able to encash that investment.
Oh, that looks slightly challenging task.
Yes.
Okay. So my final request rather is, since we have only this opportunity to talk to you, we would like to visit the plant because it will give us great opportunity to learn. And we have suggested this to IR also. So if you can help us doing that, it will certainly be of help. We'll travel from our city because we will be coming from Pune and we are ready to do that. So if you can plan something on that line, it will help all of us.
Yeah. So as at Transpek, we have always encouraged and invited shareholders to visit us. In past, I think about 2-3 groups of shareholders in batches of about 10-12 they had visited. We would be happy to welcome you or anybody on the call, based on a proper schedule and proper arrangement in consultation with our investor relations advisors. Please connect with them and we will organize. No problem.
Wonderful. I'll do that. I'll connect with you. Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Thank you so much for taking my question. Hope I'm audible.
Yes, yes.
Yeah. Hi, sir. So, sir, this is my first question. I really wanted to know, sir, Q3 and Q4 revenues are very similar, but our margins are very different. So what was the major driving factor for that, sir? And would we see, so in FY25, will the margins be a bit subdued? So how would it be, sir?
So basically, as I mentioned in the beginning of my speech, that when you look at Transpek's financial performance, you must or you should look at annual performance, because quarter to quarter there can be variations. Now, why is this variation? So I'll just explain that. We have diverse range of products. So we have products which are, as I mentioned, going into polymers, going into pharmaceuticals, and then there are different customers, different regions. So just to give you an example, that region A, same product going to region A and same product going to region B, there can be price difference, there can be margin difference based on that price. Secondly, in some cases, we may have consistent margin because of some agreements or some long-term purchase order that we may have from the customer. Now, in a particular quarter where you see our margins to be higher, we may have demand or we may have orders for those products where the margins are higher or margins are consistent. In the next quarter, you may see lower margin because the product or the demand that we have or the supplies that we make may not be as good margins as we had made in the earlier quarter. So on an average, if you look at last 4 or 5 years annual numbers, you will always find that we have remained around 17, 18, 19, 20% EBITDA. So that way margins are quite consistent. Quarter to quarter, you will definitely see variation.
Oh, okay. Fair enough, sir. That helps me a lot, sir. And sir, just like from what we had, replied into the earlier participant, we see some kind of demand betterment from H2. So is it fair to assume that H1 would be similar to H1 FY24? And like, if you could just give some small guidance in terms of our revenue and EBITDA in terms of FY25.
I can say that it would be little better than H1. Last year.
Okay. And so, sir, on overall, can we do a double-digit growth in this year, sir?
Just one moment.
Yeah.
Just one moment. Maybe very close to double digit.
Oh, okay. Fair enough, sir. And so just last question, sir. So what, as analysts, we would not be understanding the industry very well, but what could you say as would be a turning point that, okay, growth has started coming in, orders have started coming in, what could, how would you be able to define that for our industry, our company, so that, okay, now things look like what they were looking in FY23.
In terms of overall chemical industry we are talking about?
Yeah, so our overall chemical industry, if we speaking about destocking and maybe a bit about our company also, like something that, you think is a tipping point for.
It's very interesting. I mean, I'm sure you might be invested in other chemical companies also, and you might be hearing the same thing from there. It's like, we get a sense that, okay, things are going to improve now and destocking has happened and this and that. And then still some challenges keep on coming. But what I feel is that maybe in another 1.5 years time, we should be seeing, kind of back to glory days in chemical industry. This is my feeling. Now, it will also depend on how government policies and everything else is also there. How because in my view we have not been able to capture China plus one opportunities as much as we should have captured.
Oh, okay. Fair enough, sir. That's it from my side, sir. All the best, sir.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Am I audible?
Yes, sir. Please go ahead.
Thank you. Thanks for the opportunity. Good evening, Vimal bhai.
Good evening. Good evening.
Vimal bhai, couple of questions. First, you mentioned one clarification. You mentioned that 30-35% of the revenue coming from these new products, which are high margin products. You mentioned the margins will be 22%. So you are talking about margins for the overall company to go from 16-20 to 20-22 range, or 22% is the margin for that 35% product basket?
So this 30-35% can give 22-23% EBITDA.
Okay, fair enough. And sir, this 30-35% high value products which you are talking about, so does it include this new acid chloride which we are starting this year, or have started say in last 6-8 months, where you mentioned that?
No. These are non-acid chloride products.
So you are talking about non-acid chloride. Let's assume ki you mentioned ki our polymer business can be around 800 to 900 crores, and another 100 crores from this new acid chloride.
No. Just one moment. Not polymer business. Our total business can be about 800 to 900 crores, which includes pharma, polymer, everything. Not just polymer.
Okay, got it. So that means including this new acid chloride products, you're talking about 800 to 900.
Yes.
But then this doesn't include this non-acid high margin products, right?
Yes.
So when you say 30-35% contribution can be from there, even if I take say 900 as the existing company turnover, so are we talking about somewhere 300 crores of revenues from these new products?
If you take 900 as the base, yes. But if you take current base of about 600-700 crores, then it's about 200 crores.
I mean, what time frame can we do this 200 crores?
We basically need to understand the overall demand visibility, but potential of these products is quite good. It can go to 200 crores, it can go to 250 crores when you put all these products together.
Sure. And I believe these are the new products where Mr. Singh has been working on these products. Probably it includes one of the pharma product also.
There are products for pharma, there are products for, again for polymers, there are products for some other applications also.
Including the combination chemistry?
Yes. Mr. Singh is very actively working on some of these products, yes.
Yeah, I know we have met during the AGM, so he seems to be quite upbeat on the products. But also we were waiting for some approvals, regulatory approvals for these products. So you mentioned somewhere in one of the participant replies that the validation batches are being done.
Yes.
So typically when do we expect to launch these products?
Very difficult to say, maybe 3 months, 6 months, 8 months. It's very difficult to say like that, because as I mentioned earlier, customer will do not only validation, customer will also do performance trial. Then first performance trial, then second performance trial, then commercial performance trial. So it's a process, and sometimes these products are priority at customers and sometimes they are not. It may be very big priority for us, but it may not be as big priority for customers. So this is little tricky to forecast. But as I mentioned, over next 2.5 years, we should be able to commercialize most of these products.
Sir, are we waiting for customer approvals, or also we are waiting for regulatory approvals as far as these products are concerned? Both. And sir, assuming suppose the customer approvals come in say next 8 to 12 months, So then, do you feel somewhere, is it possible that the customer approvals come, but somewhere we lack the capacities to produce these products? maybe because the regular approval is not coming in, you're not getting that company which you would like to ideally buy and, probably produce those products at some job working company or a new company to be acquired?
Largely, that possibility is very, very